Good afternoon, everybody. This is Silvia Ruiz speaking, and I would like to welcome you to Ferrovial's conference call to discuss the financial results for the first half of 2025. I am joined here today by our CEO, Ignacio Madridejos, and our CFO, Ernesto López Mozo. Just as a reminder, both the results report and the presentation are available on our website since yesterday evening after the US market was closed. At the end of the presentation, there will be a Q&A session. As in previous calls, you will have the opportunity to ask questions live. For that, you will need to join the call through the conference call channel and press *5 on your phone keypad. If you prefer, you can send them through the forum included in the webcast, and I will be reading them out loud at the end of the Q&A session. With all this, I will hand over to Ignacio. Ignacio, the floor is yours.
Thank you, Silvia, and hello, everyone. It is my pleasure to present our first half of 2025 results, in which we saw robust performance across all business divisions. In highways, we delivered a strong revenue and EBITDA growth from our North American assets. In airports, the construction of the new Terminal 1 and New York's JFK Airport continues to progress. In construction, we delivered solid profitability with an adjusted EBIT margin of 3.5% for the first half of the year, in line with our long-term target. And we ended the first half with a net debt position of negative 223 million euros for ex-infrastructure project companies, a figure that does not include proceeds from the divestment of Hydro, which was closed in early July. In terms of capital allocation, we delivered a good combination of growth investments, proceeds from divestments, and dividends from projects, as well as distributions to shareholders. We closed the acquisition of an additional stake in 407 ETR for 1.3 billion euros, while divesting our entire stake in the AGS airports for 533 million euros and injecting an additional 244 million euros of equity in the new Terminal 1. We collected 323 million euros from our infrastructure projects and distributed 334 million euros to shareholders in the first half of the year. Turning to main corporate events in the second quarter, in June, we completed the acquisition of an additional 5.06% stake in 407 ETR from Atkins Realis for 1.99 billion Canadian dollars, increasing our stake in this Canadian highway from 43.23% to 48.29%. The investment reflects our confidence in the long-term growth prospects of the Greater Toronto Area and the long-term value of this asset. We also completed the divestment of our mining services business in Chile for 42 million euros, one of the few services businesses pending to be sold. And earlier this month, we announced the completion of the sale of our entire remaining 5.25% stake in Hydro Airport for £466 million. Finally, good news on the pipeline, as Ferrovial-led consortium has been shortlisted for bidding the I-24 Southeast choice lanes in Tennessee. Turning to our highways business division, highways revenues grew by 14.9% in the first half on a like-for-like basis, while adjusted EBITDA improved 17.1%, driven by a strong performance from our U.S. assets. Our U.S. highways grew revenue by 15.9% in the first half, and adjusted EBITDA increased 14%, both on a like-for-like basis. U.S. highways represented 88% of total highways revenues and 97% of total adjusted EBITDA. Dividends from our North American highways totaled 240 million euros in the first half of the year, compared with 339 million euros in the same period last year, when we paid a larger first dividend at the I-77. Turning to the 407 ETR, the asset has shown a great performance with EBITDA growing at double digit, despite the Schedule 22 provision. Revenue grew by 19.7% in the first half of the year, compared with the same period last year. Toll revenue increased 19.3%, primarily driven by higher toll rates, which went into effect on January 1st, 2025. Fee revenue grew 25.4% in the first half, driven by higher account fees resulting from higher traffic volumes, as well as higher lease fees and enforcement fees. Traffic improved 5.8% in the second quarter, driven by more targeted rush hour driving offers beginning in March, partially offset by adverse weather and a delay in construction activities in the alternative Highway 401. In Q2, we accrue a provision of 19.3 million Canadian dollars for expected Schedule 22 payments, with a total of 45.2 million Canadian dollars in the first half of the year. Despite higher operating expenses due to the Schedule 22 provision, the 407 was able to deliver double-digit EBITDA growth of 13% in the first half of the year. Promotions are working well, and we will continue improving demand segmentation, which we believe is key to enhance value for users of the 407 and maximize EBITDA growth. In terms of dividends, 200 million Canadian dollars was paid in the first half, and another 250 million Canadian dollars was approved to be distributed in the third quarter. Combined, these 450 million Canadian dollars represents an increase of 12.5% compared to the amount distributed in the same period last year. Moving now to the US managed lanes, all assets have performed very well in the first half of the year, with revenue per transaction continuing to outpace both inflation and GDP. I like to highlight that adverse weather events, primarily heavy rain, negatively impacted the performance of these assets in the first half of 2025 compared with the same period last year. At NTE, traffic was impacted by the capacity improvement construction works and declined 3.9% in the second quarter and 4.8% in the first half of the year. Revenue per transaction increased by a healthy 13.5% in the first half, benefiting from favorable traffic mix and more mandatory mode events. Adjusted EBITDA, which grew 6.3% in the first half, was impacted by $2.7 million of revenue share. NTE distributed $108 million in dividends in the first half at 100%. LBJ grew transactions 1.3% in the first half, despite increasing affection from construction activities in nearby corridors. Revenue per transaction grew 8.8% in the first half, while adjusted EBITDA grew 10.8%. The LBJ distributed $52 million in dividends in the first half of 2025. NTE 35 West is the only project in Dallas that is not affected by construction works in the area and grew transactions by a solid 3.9% in the first half, while revenue increased 13.5% and revenue per transaction improved 9.2% in the same period. Adjusted EBITDA, which grew 9.7% in the first half, was impacted by $9.9 million of revenue share. Dividends in the first half were $99 million. Moving now to the I-66, transactions increased by a healthy 6.9% in the quarter and 5.5% in the first half, while revenue per transaction grew 20.1% in the second quarter and 22.5% in the first half. This robust growth was driven by growth in the corridor, particularly during peak hours, despite adverse weather. I-66 distributed $64 million in dividends at 100%. The I-77 increased transactions by 2.3% in the second quarter and by 1.4% in the first half, despite adverse weather and the positive impact from alternative lane closures observed in previous quarters having mostly dissipated. Revenue per transaction grew 23.8% in the first half and adjusted EBITDA by 22%. Adjusted EBITDA was impacted by $10.3 million of revenue sharing in the first half, including revenue sharing related to extended vehicles. I-77 distributed $22 million in dividends at 100%. Turning to airports, our new Terminal 1 project at JFK Airport remains on schedule and on budget, with construction having advanced 72% as of the end of the second quarter. 2025 is a crucial year for NTO, with key project milestones, system integrations, and advanced negotiations with several airlines. We have secured commitments from 21 airlines, consisting of 13 executed agreements and 8 letters of intent. This month, NTO issued $1.4 billion in long-term green bonds, completing the refinancing of Phase A. We have invested €244 million in the first half of the year, with an additional €63 million pending investment to be injected next year. At Dalaman Airport in Turkey, traffic declined slightly by 0.3% in the first half, impacted by lower domestic passenger volumes, with international traffic in line with 2024 levels. First half revenue grew 10.4%, while adjusted EBITDA increased 10.9%, driven by higher commercial income per passenger, partially offset by higher OpEx due to inflation. Moving to construction, where revenues reached 3,453 million euros in the first half, 2.6% above the same period last year on a like-for-like basis. Adjusted EBITDA was 191 million euros, up 4.2%, and adjusted EBIT total 119 million euros, an increase of 11.2% like-for-like. The adjusted EBIT margin was 3.5%, in line with our long-term target. Budimex continues a strong performance with a 7.3% adjusted EBIT margin. Weber maintained a stable margin of 2.7%, and Ferrovial Construction improved to 1.6%, up 50 basis points year-over-year. We ended the first half with a record high order book of 17.3 billion euros, 45% in North America, and with 2.7 billion euros in pre-awards or projects awaiting financial close not included in the second quarter. Our operating cash flow was negative 104 million euros in the first half, compared with negative 53 million euros in the same period last year, due primarily to the lack of advanced payments in the first half of the year. We maintain our average long-term adjusted EBIT margin target of 3.5%, and now Ernesto will continue with the main financial information.
Thanks, Ignacio. Yes, I'll be covering the different lines of the P&L. In the operating part, I will also talk about other businesses. In EBITDA, we have the impact of a plant, energy from waste plant at Allerton in the UK, suffered on planned downtime in the first half of 2025 due to leaks in the superheater in the boiler system. This has been repaired and the plant has returned to operation. We have provided for this stoppage and also for the eventual replacement of the superheater tubes later on. In terms of depreciation, we reflect here the higher traffic of all our operations following the growth of these assets. In terms of disposals and impairments, we have the impact mainly of the divestment of AGS, and also it has the impact of the divestment of mining services in Chile. In terms of financial results, regarding the financial results from infrastructure projects, in the first half we see a slightly higher expense due to a lower net cash position at the project level. In terms of the financial results from ex-infrastructure, you see that in the second quarter you have a growth compared to the last quarter last year, and the main component here is the ticking fee in the divestment of Heathrow that is carried at fair value. The divestment of Heathrow has happened in beginning of July, but this ticking fee is reflected since it's carried at fair value in the accounts of the first half. When you look into the overall first half in terms of financial results, ex-infrastructure projects, you see some lower return on the cash at hand, and this is related to, for instance, the shareholder loans that were lent to AGS and not in place. So this is a return on cash at hand in deposits. When we look into the equity accounted affiliates, the 407 has grown its results down to the bottom line. If you see a slight decline, it's because some other projects are being phased out. An example of that is the maintenance of operation of the M30 in Madrid. But the main component is the 407 keeps growing up to the bottom line. Below that, we have the income tax expense, lower than last year. Here, basically, part of the results is not subject to taxes like the capital gains on disposals. We have a net profit from continuing operations and an added income below that from discontinuing operations, and this is related to earnouts from services business that were divested, but we keep having some earnouts. If we move to the next slide to see the net cash position, we see, as it was introduced by Ignacio, that we have a good performance from dividends from projects. Construction operating cash flow has been well affected, as Ignacio said, by lack of advance payments. Working capital also has a seasonality that you know well. In terms of other activities, we also have some cash consumption. In terms of tax payments, is basically related to Budimex. We have invested for growth that is reflected in the cash flow used in investing activities. The main one here is the acquisition of 5.06% in the 407 ETR, and of course in the investments in NTO. NTO doesn't have, for the remainder of this year, doesn't have any additional capital investment. It will have some in 2026, but not remaining this year. And then we have the interest received in our cash, and divestments, mainly AGS is the main one here. Then of course we have shareholders distributions between cash and share buybacks. And then we have the impact in financing activities of paying down debt, interest, and effect of the FX translation of cash in hand. We have at the bottom also shown hedging positions in Canadian and US dollar. We don't show them in pound sterling. That will be reflected when you see the third quarter results with the sale of the remaining stake in Heathrow, the 5.25%. So these hedges that we have here for dividends and investment are not part of the P&L and are not part of the net cash position that we show here. So, I mean, for your perusal, we show the mark to market that they had at the end of the quarter. Okay, and after reviewing the net cash position, I pass on to Ignacio for the closing remarks.
Thank you, Ernesto. So in summary, we delivered a strong performance in the second quarter and first half of 2025, supported by solid revenue and profitability growth from our North American assets. This growth is driven by increased customer segmentation and the continued underlying growth in the local economies where these assets are located. Looking ahead, we continue to see an attractive pipeline of US highways assets with bids submittals for the I-24 in Nashville and the I-285 East in Atlanta expected in the first half of 2026. The composition of our construction order book remains healthy, and we anticipate limited exposure to inflation. And we continue to deliver on our strategic horizon plan, and we'll continue to update you on the progress. And now we will turn to the Q&A session, and we'll answer any questions that you may have. Thank you.
Thank you, Ignacio and Ernesto. Let's start with the Q&A. Operator, please, you can go ahead.
Ladies and gentlemen, we will now begin the Q&A session. If you'd like to ask a question, please press *5 on your telephone keypad. And if you change your mind, please press *5 again. Please ensure that your device is unmuted locally before proceeding with your question. Our first question comes from Luis Prieto from Kepler Cheuvreux. Please go ahead.
Good afternoon, and thanks a lot for taking our questions today. I had a couple of them, if I may, and apologies because I know you commented on this to some extent in the previous quarter, but I was wondering if you could shed a bit more light and explain the moving parts of the very strong growth in average revenue per transaction in both the I-77 and I-66. And my second question along the same lines, I'm still quite surprised by the 13% average tariff per transaction or average revenue per transaction increase on the NTE despite the 4% decline in traffic. So if you can give us a bit more light on why there are more mandatory events in a declining traffic environment, that would be very useful. Thank you.
Thank you, Luis, for your the questions. Yes, I will start with the I-77, I-66. Also applies also part of it to NT. No, but I think that the part of the growth is driven by the growth that we are seeing in the metropolis, where we have the assets, the economic activity, and the population growth, and also that we are able to capture the value that we give to users, in sense of traffic savings, reliability, convenience, or safety. In the more specific case, though, of I-77 and I-66, as you know, in this case, we don't have a soft cap, so we can increase the toll rates according to what we think is the value that we give to customers. So most of the increase is coming from increasing toll revenues and also with the dynamic prices adjustment. So based on the behavior and the value that we see every minute with the customers, so we adjust the tariff according to that. And with that, we have been able to capture the value that we give to users. In the case of the NT, the difference is that we have a soft cap. So in this case, the increase is coming also from mandatory modes. And what we have seen is heavy traffic, especially at peaks. And also what we have seen is a mix of peak hours and more heavy traffic that has been able to increase the revenue per transaction at the NT. On top of that, as you know, every year in the Dallas managed lanes, we have an increase with inflation and some slightly dynamic pricing, but I think that over the year we have been able to adjust that more. So the main effect at NT has been related to the effect of the mix of traffic, especially heavy and peak hours.
Super clear. Thank you.
Our next question comes from Ruairi Cullinane from RBC Capital Markets. Your line is now open. Please go ahead.
Yes, good afternoon. First question is earnings from Ferrovial Construction grew in H1 but declined year over year in Q2. Was that simply a function of some contracts coming to end, or was anything else driving this? And then secondly, could you provide any commentary on the tax rate? Some of the factors driving the low tax rate seem quite sustainable. Thank you.
Thank you and good afternoon. Thank you for the question. I will answer the first one about Ferrovial Construction, and Ernesto will comment about the tax effect. As in the first half of the year, what we have reached in construction is a 3.5 EBIT margin. That is what we communicated that is the long-term average target that we have for this business division. And this 3.5% is above what it was in the first half of previous year. It is true that for Ferrovial Construction in the second quarter of the year, the margin was lower than it was previous year. And the main effect is related to some additional cost related to the utilizations and some IT systems, and also bidding. We are seeing an increase in bidding cost in Ferrovial Construction that has the overheads cost. And it's something that also we'll see in the following quarters, but because we have a very good pipeline, but it's also costly in terms of bidding costs to tender for these projects. Ernesto, you want to?
Yes, thanks. Well, regarding taxes, I mentioned that basically all the capital gains are not taxed. That really influence the results this first half of the year and this quarter. One thing that is important to understand is that the underlying average probably is around 20%. We have that in more detail in the financial information that we have filed. So you have a note there where you can see that is more like 20%. But regarding cash, what you'll expect to see if we keep investing in the US in all these big infrastructure projects allows accelerated depreciation, and that provides a delay in these tax outflows, and that basically works in all our group there. So I mean, just bear in mind around 20%, as we say in the note, would be the average from an accrual point of view.
Thank you.
Our next question comes from Graham Hunt from Jefferies. Your line is now open. Please go ahead.
Thank you very much for the questions. I've just got two, please. Firstly, on the upstream dividends, those seem to be running ahead of where at least we were expecting them to be. You've said that typically should track dividends up to shareholders. So I just wondered if we could expect any kind of increase to your shareholder returns policy or expectations as we go forward as those assets outperform. And then second question, just on US policy, I wondered if you had any comment on both the expansion of the TIFIA framework by the DOT, which I think is helpful for your projects, and also to some extent what we've been hearing is sort of stripping back of some of the environmental headcount in the administration, if that has any impact on NEPA approvals, and whether that has any flow-through impact to your projects. I'd just be interested to get your perspective on those administration points. Thank you.
Thank you, Graham, about these questions. I think the dividends coming from our infra projects are related on the performance of the asset, as you have seen, as they are improving versus previous year. So that's why we are seeing more dividends, with the exception of the jumbo, dividend that we had in I-77 after 5 years. No, that was the first dividend. But for the rest of the assets, dividends coming from the projects will be related mainly to the performance of these assets, no, in the following months, and so far has been positive and increasing. In terms of shareholders distribution, as you know, what we gave is a guidance a couple of years ago that we increased recently in February, and we mentioned the 2.2 billion euros of dividends for the period 24 and 26, and this is what we are targeting at the end of next year. In terms of TIFIA expansion, I think it's very positive news. The label CapEx is moving from 33% to 49%, so it's improving the financiability of the large projects that we are doing. We see that as a very positive news for the next projects that we have. And in the terms of the environmental, I think that so far we have not seen yet any impact. And but we see it as a more positive thing, no, that could happen in the following months, especially streamlining some of the environmental permits that we need in our large projects, something that is happening also with digital infra, but we expect to be extended to other infra projects. And with that, will reduce the timing, no, for the projects and also the cost related to that. So we see that as a positive development. But so far we have not seen delays, no, because of the lack of personnel, no, at the environmental agencies.
Super helpful. Thank you. Thanks.
Our next question comes from Dario Maglione from BNP Paribas. Please go ahead.
Hi, I have two questions. One on the I-77 specifically. In Q2, the revenue growth was impressive, was 28% year-on-year. It accelerated compared to Q1, and that's despite that Q1 benefited from closure of alternative roads. So can you maybe explain what drove such a big increase and whether there is a one-off in there or it's a sustainable performance? And then the second question is more broadly, if you can just speak about the trends in traffic and revenue on your US managed lanes in July? Thank you.
Yes, thank you, Dario. Yeah, about the I-77, as you saw, the revenue per transaction grew this second quarter versus, the number of transactions and the traffic grew in the second quarter versus the first quarter, but it was a limited number. So most of this 28% that you are mentioning of revenue growth is coming from toll revenue, from the increase in the toll rates in the 77. What we have seen is a lot of additional mobility value for the I-77, and because of that, we have seen an increase in the revenue of transaction that is transforming increase in revenues for the I-77. Still, when you see the toll rates of I-77 are much lower than other assets that we have in our portfolio. And we don't give guidance about revenue per transaction. So we sorry about traffic or revenue for the month of July, so we cannot disclose any figure about that. But you have to wait until we have the results of the third quarter to get some information about what's going on in the traffic.
Okay, thank you.
Our next question comes from Elodie Roll from JP Morgan. Please go ahead.
Hi, good afternoon. Thanks for taking my questions. The first one is on the Schedule 22. The provision was lower in Q2 than it was in Q1, despite revenues being higher. So we're just wondering how to think about that for the full year and what caused the Q2 being lower than Q1. My second question is on the pipeline on the US managed lanes projects. I think you mentioned you had 6 ongoing. So I was wondering if you could give us a bit of an update there on how the competitive environment is going and how do you see prospects for you. And my last question is on the progress with regard to the liquidity on the US line. If you think that the Nasdaq 100 inclusion this year is likely. Thank you very much.
Thank you, Lydia. I will take the first one. Ernesto will take the last one. So talking about the Schedule 22 provision, as you know, the first quarter we took a provision based on the best information that we had at that time, but it was only 1 month of March that usually counts for Schedule 22 days or peak hours for the year. Now we have more information because it has been 3 additional months. And because of that, we have reduced in the quarter the provision based on the expectations that we have it will be for the end of the year and based on the revenues that we are expecting. So I will say that is with the better information, and the reduction also is coming because promotions are working well in the 3 months that we had in the second quarter. And we are seeing a positive effect of bringing new user at peak time to the 407, and because of that, reducing Schedule 22 payments. We have still to confirm these numbers in the following quarters, but as long as we have more information, we'll see how it's evolving. In terms of pipeline, as you know, it's a very positive that, as you mentioned, we have 6 managed lanes in the following years. 2 of them that we are bidding in the first half of next year, the I-285 East and also the I-24, in which officially we have been pre-qualified, and we are also bidding next year. We have a similar number of competitors to what we used to have in the past, but I'm sure that they will be competing for those assets that in our case have shown that they are very, very successful and good value coming from these assets. So we expect similar competition that as we have in the past. It's going to be expensive, as I commented, because we're going to add some bidding costs in order to tender for these projects. But I think there could be a great value for the company if we can win these projects. And now Ernesto will continue with the liquidity.
Yeah, thanks, Ignacio. Well, Elodie, you know that for Nasdaq you have different requirements. One of them is the average daily liquidity in the 3 months up to the rebalancing. That takes place in November. Yes, we are above the liquidity required right now and plan to keep building on that. But then inclusion depends on relative performance, and also companies that are part of the Nasdaq 100 index now, they may drop to even the 125th position and still remain in the index, right? So it's going to be depending on relative performance. I mean, we're tracking that, but I cannot make any further comment. And just one last comment in terms of the accrual of the Schedule 22. Please remember that you have to add the provision for the whole half relative to the revenues of the whole half, right? So it is lower just in the quarter, but I mean, don't take the percentage of the Schedule 22 to the in the quarter to the revenues of the quarter. It's the whole half that you have to take into account.
Okay, thanks very much.
Our next question comes from Álvaro Lenze from Alantra Equities. Please go ahead.
Hi, thanks for taking my question. Just a follow-up on Schedule 22. In the process of recalculating the estimate for the year, what is it that has driven the decline in the total expected payment? Is it that you now see traffic being more widespread or better distributed across segments and hours, or is it because you see overall high revenues from mix, or is it because you see overall higher volumes across the board reducing the Schedule 22 payments? So just to understand what is the main driver of that downwards revision in Q2.
Thank you for the question. No, I think that as you know, the way the Schedule 22 works is that we have certain hours of the day, both the morning and the afternoon, in certain sectors that we need to reach certain thresholds of traffic. So what we are is calculating in different sectors at this period of time how close we are to these thresholds. No, based on that and estimates on the days of the months that we have so far, we have been until June. No, but in the following 3 months we have another 3 quarter. We have another 3 months in which we can make that calculation. But based on that and considering previous years, which days of the year were those that we calculated the Schedule 22, can help us to have an idea of how close we'll be and how much we'll have to pay. So it's not an easy calculation because you have to estimate how these days will happen in the following quarters. But comparing to the performance of previous year and the number that we have of potential Schedule 22 payment last year, we can estimate how much will be for the end of the year. What we have to say is that the traffic at the peak hours of these specific times in which we calculate the Schedule 22 is doing better than what we were expecting with the information that we had from March. But it's because part of it, mainly because the promotions are working well and we are able to attract more users in these specific segments and those specific times of the day that count for a Schedule 22. So this is the way we are calculating. Of course, it's an estimate. It may change also in the third quarter of the year, but of course, as long as we have more and more information, is closer to what will be the final figure at the end of the year. But it's based on the information that we have from previous year and how it's performing this year compared to the previous one. No, so it's not an easy calculation.
Okay, thank you. Understood.
Our next question comes from Marcin Wojtal from Bank of America. Please go ahead.
Yes, thank you very much for the presentation. My first question is on the ETR 407. I believe at the beginning of June, the province of Ontario removed tolls from the road, which is called 407 East, which is just essentially an extension and adjacent road. Have you seen any benefit in terms of traffic on the asset that you operate? Do you expect any benefit going forward, or that is very marginal overall? And my second question, do you have any further thoughts about potentially a switch to a full US GAAP reporting, and would that help when it comes to your US listing and potentially index membership? Thank you.
Thank you, Marcin. I will take the first one, and Ernesto will take the second. Yes, as you commented, tolls at the 407 extension were eliminated at the beginning of June. It's still too early to see an effect of how it could contribute to more traffic to the 407. In the past, when we saw some elimination of tolls in other toll roads closer to the 407, we see a positive evolution, but it's too early to say how it will evolve this time.
Yeah, thanks, Martin. So regarding the US gap, well, all the US investors that we're meeting now are not really keen on that, but you're right that along the way to be able to be included in most US indices, you need to report in US GAAP. So for the moment, what we are doing is just analyzing the implications and the way to automate that maybe in the future, but we are not having any short-term plan to do that.
Okay, well, thank you very much.
Our next question comes from Harishankar Ramamurthy from Deutsche Bank. Please go ahead.
Yep, thanks for taking the questions. A few from my side. On 407 ETR, it indeed looks like the promotions are having a good impact in driving traffic growth. But do you think the pendulum has swung too much in favor of driving volumes over keeping pricing high? So maybe put differently, should we see lower levels of promotions in the coming quarters? Or would you still favor volume growth over pricing? And maybe on a tangent, does this reaction to promotions also mean that demand is not as inelastic as we think it is? And does that bother you? And maybe last one on Budimex. Looks like the order inflows are quite weak this half. I get that these can be lumpy, but is there anything beyond timing issues in the inflows here? Thanks.
Thank you. About the promotions, no. First, I mean, what the strategy that we are following, no. So what we want to do is keeping the level of service to regular users of the 407 in terms of value that we offer to them, no, in terms of the speed, the reliability, safety, and so on. No? So we want to make sure that we maintain that. We want that the 407 also support the congestion relief, alleviate congestion in the area, reducing with that Schedule 22 payments, and at the same time maximizing with that revenues and EBITDA. No? And promotions, as you commented, are working very well. So I think this is very early days of what we are doing, but has been very positive. No? And we can see in the results that both revenue and EBITDA is increasing. What we are trying to achieve with the promotions, at least at the beginning, is bring users that they have never used before the 407 in these specific segments at this specific time of the day. So it's not affecting the regular users because it's not affecting the level of service, but we are reducing the congestion in the area, bringing some users that will never do at that specific time in those specific segments. No? And so far, it's working very well. But it's very early days about the promotions and segmentation. We are getting a lot of data, a lot of information from our users, and this may evolve in the future to reach the objectives that I mentioned at the beginning. From elasticity, what I have to say for the regular and historical users is very similar to what it was in the past. So it's very low elasticity and not a real change compared to what we saw in previous increases during last year. No? So we are comfortable where we are today, and what we see for promotions is not only that they are working, but it's open a new opportunities in the future for further segmentation, as I commented previously. And in the case of a question about the Budimex, what we are seeing is, yes, we saw that we had a reduced number of awards in this first half of the year, a slightly reduction in the total order book since the beginning of the year. But I mean, in the following quarters, we are optimistic about Poland in general with the European funds, investment in infrastructure, and energy, especially data centers too, and also in the longer future, maybe Ukraine reconstruction. But I think that we are positive about Poland and the opportunities there. And yes, it's true anyhow that the first half of the year was lower awards compared to the first half of the year last year, and also reducing the order book compared to what we have at the beginning of the year. But we are optimistic about Poland in the future.
Very clear. Thanks.
Ladies and gentlemen, please be reminded that if you'd like to ask a question, you must press *5 on your telephone keypad. Our next question comes from José Manuel Arroyas from Santander. Please go ahead.
Thank you. I have three, please. First one is on NTO. I wanted to confirm that the project remains on time and on budget, on time meaning opening in June 2026. Second question is a clarification on the dividends from the energy segment. I think there were 54 million dividends being paid. There were nil a year ago. Can you explain the source of those dividends and if they may recur? And lastly, on NT35W, I noticed there was a bond issuance, about $400 million raised in June. And I wanted to understand if this bond can be used for general corporate purposes, including the payment of dividends, or if it's just a refinancing exercise. Thank you.
Thank you, José Manuel. I will take the first one, and Ernesto will follow with the other two. And about NTO, as we commented during our presentation, NTO is on budget and on schedule. Also, as we always comment, the last year is the most difficult for a project like a new terminal, the new Terminal 1, and is where we have a lot of system integration, more resources working at the same time, coordination of different groups of people. And I think that we are where we would like to be when we started this project. But anyhow, the last year is the most challenging. So still, until we open and we don't close it, we'll never say that we are finally on budget and on schedule. But I think so far we are in a good position.
So the question on the 54 million dividend from energy, well, we closed the project finance of one of the projects, and the invested equity was returned, right? So it's a return of capital. In terms of the refinancing of NT35 West, basically there has been a refinancing of the TIFIA loan. What you get with this refinancing is lengthening of maturities. TIFIA will have an accelerated repayment schedule, and you lengthen the maturity of the financing.
Our last question comes from Cristian Nedelcu from UBS. Please go ahead.
Hi, thank you very much for taking my questions. The first one on ETR, can you talk about the factors that are considered when determining the dividend? I think the ETR debt service coverage ratio is coming down, and many years ago, ETR used to pay around 100% of its EBITDA in dividends versus around 75% last year. So I'm trying to understand what is holding ETR back to get to that type of dividend distributions. The second question, coming back to the Schedule 22 provisions, if I understand well, that the traffic at the peak of the peak seems to be around 2% below the threshold in Q2. I'm just trying to understand, can you help us, how much is this threshold going up every year? I know you have a range, but is it fair that it's more a 1% increase in the threshold every year? I'm just trying to think how many years you may need until you go above that threshold. And the last one, if you allow me, on the US managed lanes, on the dividends for I-66 and I-77. If I take a step back and I look at the I-66 and 77 capital structure, the equity represents around 35 to 45%. Now, is there any reason why the capital structure here will not move midterm closer to what we're seeing in the Dallas-Fort Worth lanes, where equity is 20%, debt is 80%? So can you elaborate a little bit if there's anything restricting that over the midterm? Thank you.
Okay, so regarding the thanks for all the questions. I mean, regarding the 407 headroom in terms of coverage, actually that has been highlighted. That has been highlighted by the rating agencies' reports. So yeah, they expect that there could that part of that headroom could be used. So no, I mean it's a natural course of business and discussions in this regard. So yes, there could be some headroom there. Regarding the I-66. As well, going forward, yes, you could have some headroom there. So both assets that you mentioned, yes, they have room for some further regearings to a capital structure more in line with others. Well, regarding the I-77, probably there's a little bit less margin there in terms of capital structure. So I would focus more on the opportunities in 407 and I-66.
Regarding I will move now to the Schedule 22. No, the question that you asked. No, it's not clear how you calculate this 2%. No, below the peak of the peak is not calculated as that because it depends on the different segments and some of them are reaching the traffic above threshold, others not. So it depends also the time of the day. So I think it's much more complicated than that. So it's not so easy from my point of view to calculate that. You can calculate that. You may have some estimates, and then now with in the following years, no, with information that we are giving you, but it's not so easy or straightforward to calculate in that specific way. No, the way the thresholds are moving. So each of them is different depending on the segments and the traffic, no? And they can move every year, increasing between the 0 and the 3%, but depending on the position of the segment, and they increase until they reach the final configuration, no? So they have certain level of traffic that is the one needed to give the level of service that we are committed to give to our users, no? So this is the way that is evolving. I understand the Schedule 22 is not very easy to calculate to all of you, and it's very complicated even for us because it's a lot of estimates that we need to do, and we have more information. But I think that the provision that we are giving you and the numbers that you are getting, I think is good enough. And this is the best knowledge that we have today of what could be this final payment at the end of the year.
Thank you very much.
There are no further questions from the conference call at this time, so I will now hand the line back to Silvia Ruiz for any questions coming from the webcast. Thank you.
Thank you. So we have a couple of questions coming from Ami Gala from Citi. First question, can you comment on the recent pricing and traffic trends in the U.S. managed lanes business and disruption, if any, from the Texas floods? And the second question is related to Budimex and Weber. Can you comment if there are factors influencing phasing of the order book and any color on what's likely delivered longer term beyond 2026?
In terms of traffic, no, for the U.S. managed lanes, what we saw in the 5 of them, that the underlying economic growth of the cities and the population and economic activity has been very positive. Was the case also in the I-35 West, and is showing without construction effects how is the rest of the Dallas-Fort Worth area is performing, and also we saw growth I-66 and I-77. Even though we have negative effects in all of them from weather, the second quarter was very rainy all over the U.S. and especially in these places. And in Texas we have flooding. Unfortunately, we have some people passing away. The very sad incidents that happened over all Texas, and we're lucky that it was not affecting any of our assets, but we had some disruptions, no, because of weather, at some periods of time during that quarter, but also happened in Charlotte and also happened in Virginia. No? So with that, a negative effect in terms of traffic, but positive because of the economic activity. The only two that the traffic is lower of NTE and LBJ is all related to construction. One is the capacity improvement work that we are doing, that probably because of so much traffic, some people are looking for different alternatives, taking a different corridors. And in the case of the LBJ, this construction is because a change of configuration in the construction works that are nearby the LBJ. Is the case of the 635 East and also the 35 East, that both of them are affecting traffic to the LBJ. And what we have seen in this last quarter is that they changed the configuration with more traffic impact than what we saw before. No? But in general, the underlying trend of all our assets in terms of economic activity is positive. And because of that, I mean, the pricing is moving, the revenue per transaction and pricing is moving in the right direction, capturing the value to users. And I think that in all of the assets are performing very well in terms of revenue per transaction. Some of the assets, as commented, 35 West and NTE, they are capturing from mandatory modes. And in the case of the I-66 and I-77, we have complete freedom to set the tariffs, toll rates, and because of that, we are able to capture most of the value that we give to users, so moving in the right direction. In terms of the order book, and how we see that in Budimex and Weber, I commented previously about Budimex, which is temporary as the first half of the year, but the perspectives for Poland in general in the future I see as a positive development. No? So I think that we'll see hopefully a positive effect in the following years. And in the case of Weber, we have record order book. I think is very good, and I think in general what we see in the future beyond 25 or 26, I think positive and negative. We see a very good pipeline of managed lanes that if you win some of those are very large projects. As you know, we do with Ferrovial Construction, but also Weber is supporting some of these large projects. And also what we have to wait to see what happens next year is with the surface transportation reauthorization bill and how much is going to be the support of funding for infrastructure in general to the US, but it's too early to say what will happen next year and what effect will have. But in terms of internal pipeline of projects with concession, I think we are very positive about the US, and if we are able to win also for Weber and other of Ferrovial Construction in the US, we see as a positive development.
Okay, thank you. There are no further questions.
So thank you very much, all of you, for joining our conference call today. And for those who are taking holidays, we'll have a happy summer and happy holidays, and we'll see you next quarter. Thank you very much. Bye.